July 24th morning. We got filled yesterday on an AMD call, and I want to show you the chart. I want to show you what the thinking was behind the trade. What happened is we broke out on AMD the day before, and when I saw this, I went back on the chart and I looked at this and I said, if there's any chance for the stock to come back down here to around 59 and 59.40, I would like to buy AMD. You see where it peaked right in here, so right around 59-ish. So I had missed the rally the day before, and a few of my buddies are asking if I had gotten in. You know, I need to get a new PC editing videos, and I actually went through a bunch of videos, and man, AMD is on fire in terms of the product line processors than Intel. I was really shocked to see how far they've come since I purchased my last PC back in 2012. Things have really changed. So I was hoping to get long AMD. So what I did is I put an order in, a limit order in, to buy a call at $1. Now the stock was up here, so those options were trading for $2. So I figured if it got down to 59, I'd be able to buy it for $1. Well, guess what happened? It got down to 59 and they were still trading at $1.20. So they did not get as cheap as I expected them to. But what happened was, you know, the market got scared yesterday for whatever reason, and we actually went below 59. So we actually went down to 58.62. 63 was the low. And that option went from $1.20 down to 93 cents. So my limit order at $1 got filled. And then of course Intel announced their earnings and basically told the market that they're going to be delaying the launch of their latest processors, which are already a year behind what AMD is doing. So the stock basically has gone straight up. So that option is going to be worth a bit more this morning. So this video is going to cover that. It's just real quick, I just want to update you on a trade I did at, I think about 1:30 this afternoon. This was a trade I did in AMD. I bought a call. It's a 65 strike. It has, you can see here, this option was trading at over $2 yesterday and today. And as most of you know, I like to average down at 50%. What I did is, not that I know anything, what I did is I just said if this stock comes back down to its previous high, which is around 59, then I'd like to be able to buy this for $1. So I just left a resting bid at $1. It actually got down to 93 cents. But you know, when the stock had hit 59, these were still trading at $1.20. Pricing was still a bit elevated when the stock did come down. So I was quite lucky the stock got down. So now the stock's trading at 64, and that's after Intel announced that they're going to be delaying the launch of their latest chips, which plays right into the hand of AMD, who's already been selling the same competing chips in the market for the last 1 year. So Intel's really messed up. So I've been researching what type of chips I should be using, and it's very clear that the AMD chips are the leader now. Intel has lost its way, and because of that view, I put an order in, a limit order, hoping the market would drop back down, which it happened to do this afternoon. And so I was quite lucky with that. I just bought one for $1. You know, I'm not trading big, and then I'm going to hang on to this, and hopefully this will make me enough money to buy a new PC so that I can produce videos faster. The implied volatility, it's showing 40% right now. I believe the implied volatility was more like 55 or 60% earlier. It's going to be cheaper now because the stock's up. Now, for those of you who are my students studying options, the riddle for you is, if volatilities remain constant, how much will my call be worth tomorrow morning if the stock is trading right here at 64? Can any of you tell me what my option is worth? How would I do that right now? The market's closed. Alright, so I'm going to show you how you do that. Look where the stock closed, 59.50, okay? If we go to 59.50 on the close, if we go to the 59, we can see that it was trading around 3, and the 60 was trading around 270, so 320 to 270. If the stock is trading at, say, 63.50, then we look at the 63 and the 64, then the at-the-money call is worth $3. So what that means for us is that for tomorrow's opening, the stock is going to open at say 64, then we should be looking at a price at the money of around $3. So I'm bullish AMD. I think they're going to dominate in their space. It's amazing how they've transitioned into a leader. They've really turned this business around. So I'm not going to be taking profits anytime soon on this, but it looks like based upon where the stock is, based upon where the options are, we're going to be up 100% on the open tomorrow. And we'll have a whole nother week for this thing to trade in the money. So that's our trade today in AMD. This is, in summary, how to buy a call. You go in and pick your strike. We picked an out-of-the-money strike of about 10 to 15%. We gave ourselves a week to be right, which means we would pay less for it. We put a limit order below the market. We did not watch the market. We let the market drop, and if we get lucky, we get filled. If we don't get filled, then it doesn't cost us anything. Once we get the call, then we'll focus on our profits. We'd like to make 5 times. That means AMD needs to hit $70 by next Friday. And I don't see why it could not do that. So that's our strategy in buying a call option on a stock, and it was AMD today.